Good morning, everybody. Happy Monday. How's everyone doing today? So some of you may know, but I am in Dubai for the next couple of weeks to be teaching out here. So not a vacation, but the great thing about trading is that you can do it anywhere in the world. I have been craving to go back to Dubai. I know Jeff knows, for a very, very long time. So very glad to be here and to be able to still teach and be with you guys. So really looking forward to today's session. A lot going on in the markets. So definitely a lot of things that I want us to keep an eye on, potential breakout trade opportunities. We're seeing this rally in the markets right now, but potentially seeing it as a corrective move to the upside, just to have another impulse move to the downside. So a lot of things going on, and just want to, bring out all these different odds enhancers that we're seeing today. So good to see everyone here. Yeah, anyone wants to come, please come to Dubai. I know there's a couple places in the area that I can point out, so feel free to come and I'll be more than happy to meet with you guys. And I think Daniel mentioned before, we should do a student meetup, a traveling one. Jeff and I have also talked about doing that as well. So definitely some things we want to consider to do. So starting off pre-market routine, just before I jump into that, I do want to mention that we have our upcoming coaching event. So this is our first one based off of your requests and feedback that you send your emails on. So we're combining a lot of your feedback into one session. That's going to be our traders coaching event. It's going to be starting May 26th from 4 to 5 p.m. Eastern time. So what we're going to be doing this session is going to be very interactive, a lot of recapping of what went on during the week, just understanding why some trade setups worked, why some trade setups didn't work, really evaluating the market conditions. A lot of you guys said that you didn't understand why maybe some trades worked, why some didn't during the trading week. So we're going to be recapping all that with you guys. A couple of you have already started sending in your charts, so thank you so much for doing that. If you have signed up, please email us your chart setups. We're going to be incorporating those into the coaching event. Also doing some Globex prep, some Q&A, and just making it very interactive and answering your questions, doing a little bit of teaching as well, and just making sure that you guys are getting the most value out of that session. So if you haven't signed up yet, you can go to our website, theelitetrade.com, and then it's going to be under the upcoming events tab. You're going to click on that right here, and then just scroll down a little bit to the second one, and you're going to see our first ever traders coaching. So sign up there. Going to be, again, a very interactive and informative session for you guys. So now back to the prep screen. So our buy and sell territories have all been updated since we have been seeing this big move to the downside. So take note of the buy and sell territories. As we are still continuing to see the markets pull back and move lower, these buy territories are more going to be target prices, since the markets are still making lower highs and lower lows. We want to keep in mind that to trade with the trend, we want to be on the right side of the moves to stay in those longer. So buy territory is typically going to be more of your target profits. So we're looking to get in our sell territories to trade with the trend to the downside. Trading tip of the day, just another way to put that: in downtrends, we experience impulse moves to the downside and corrective moves higher. So a rally in price that intersects with our selling territory may be a higher probability trade with the downtrend. So again, being able to assess trend, whether we're in an uptrend or a downtrend, can help us to get on the right side or higher probability sides of our trade setups. So again, being in more of a downtrend, we're looking for those pullbacks or those rallies into our selling territories. Again, very interesting. What's in the news is just reading it and seeing how bullish it is. Very, very interesting. Again, as we can be able to read the price charts, we're still seeing some more bearishness coming into play. So what's in the news? Saw the stock market is vulnerable to good news and a 10 to 12% rally, according to Market Watch. Very interesting there. And then stock futures rise to recover from bear market brink. So seeing bullish news on Market Watch and Yahoo Finance. Not sure if this is just a way to get a lot of the novice traders in long, push the markets up, and then we're going to see more selling coming into play. So always remember that what they put out in the news doesn't always correlate with what we see on the price charts. And that's why being able to read the price charts is so valuable. A couple economic reports coming out today. We had one at 8:30 a.m. Eastern time. Well, that one already came out, and we do have a Fed chairman speaking at 12 p.m. Eastern time. So that one, just keep in mind on that. That can cause some volatility, but overall for today, relatively lighter with the economic reports. Just want to keep in mind that it is Monday, so we've seen time and time again that there often is more volatility on Mondays as the institution unwind their hedge from over the weekend. And then also I was looking at a couple breakout trade opportunities. Some more have formed that I'll show you guys since I prepped these two ones. But we have the Dow 30, it's looking like it may break out to the upside. If it does, again, that's going to be counter trend because we're looking for our ways to get in short. So keep in mind, breakouts to the upside when the trend is to the downside is going to be more elevated risk. So I'm keeping an eye more on the short trade setups and those breakouts to the downside. Stock pick, the complimentary one for today is going to be Caterpillar. And that one I'll show you on the next screen. So here's Caterpillar. We can see it's going to be a bearish trend trade. Entry price is going to be $192.94. Our stop is going to be at $208.95. And then you can see Jeff added in this light gray line here to show that if you're going to be taking a one-to-one profit, for those of you who have the stock picks, you should see that there is this light gray line in there now. That's just showing you that since the market conditions have been more volatile, oftentimes taking one-to-one profits can be a little bit more higher probability than having to stay in them longer. So the one-to-one profit is going to put you guys at, or put Caterpillar at 177.74. And then we'll recap at the end. So let's jump over now to the chart. So starting with oil, just want to get your guys' feel of oil. Are we in an uptrend on oil? Are we in a downtrend? Or are we in a sideways trend on oil? What's the consensus from the daily chart on oil? What would you guys say? Uptrend, downtrend, sideways trend? Excellent. That's exactly what I was thinking. So all you guys concur sideways. We can see up here is where we had that resistance coming into play, pushing price down, these sell orders, buy orders down here. So just, taking our buy and sell opportunities, it's just going to be a little bit choppier market environment. So that's why I wanted to start with the daily chart, just to make sure that you guys are aware of that, which you are, and that's great. Going down to a smaller time frame, the one that I'm really waiting on right now is this 10-minute sell territory. We can see that had that great picture that we like to look for on the price charts, where we can see support was tested several times right here. Price broke lower, and then we're looking for our leg base group of candles just above. So this one is still fresh, still active. Our entry is going to be at 114.8. And our stop is going to be at 115.54. So again, 114.8 with our stop at 115.54. And then I just want to jump back out to the hourly chart. Because, I was looking for some buy territories in here, but we can see we've really just been chopping around. So potentially have some breakout trade opportunities on oil to the downside. And then even down here, I'm looking for a buy territory, but then I'm always looking left to see what's over here. And I can see price has been here once, twice already. So another potential breakout opportunity here. So I just found it really challenging to find buy territories without looking left and seeing that a lot of those areas have been used up already. And in this area, price has just been chopping around. So clearest picture, what I'm seeing is the sell territory up here. And then if we start to form the 3 touches on the bottom side, potentially looking for a breakout to the downside. So that is oil. Going over to S&P, we are an outside day, so we broke out of the prior session's high to the upside. But then again, keep in mind, as I talk about pretty much each session, is that we have those impulse and corrective moves. So we've had this impulse move to the downside, we had a corrective move higher, then a big impulse move to the downside. So if the trend is going to continue to the downside, this rally right now could just be another correction back up into where we have our unfilled sell orders. That's really what I'm keeping an eye on, is that even though we may get a rally to the upside, just understanding it's going to be counter trend and it's going to be a little bit more elevated risk. So going down to the smaller time frames. So we do have a 2-minute buy territory down here. I'm actually going to go up and left to show you the sell territory first, which is a lot further away. So we can see we have this pocket of points over here where there's not a whole lot in the way, and price just had this strong drop to the downside. But again, taking a breakout to the upside in the context of a downtrend is overall going to be more elevated risk. Until we get up here where we have this 20-minute sell territory, we can see that's where we start to get that picture of the 3 touches on the bottom side, and then the leg base group of candles just above that area. I would say keep in mind with some of the areas on our prep screen as well, is just keep an eye on volume. So some of these are going to be on lower volume, which means that there's less institutional activity, less trading involved at those price points. So it's going to be a little bit more elevated risk. But here's where we could see the 3 touches coming into play. We had that breakout, and then we had the leg base group of candles just above. So group of candles there. But again, just once you take your cursor, if you have Thinkorswim and scroll all the way down, you can see that this was formed in the overnight session on lower volume. So just understanding a little bit more elevated risk with this sell territory right here. So what I'm really looking for is how to participate in the short trade setups, looking for breakouts to the downside, because we can see we also have a pocket of points to the downside, really not a whole lot in the way until we get to our 2-minute buy territory down here. So I had to go down, I believe, to a 2-minute time frame, a 1 or 2 minute to find it. But we can start to see where this area on the 2-minute on the S&P is being used up once, twice, 3, 4, 5, 6 times right in here. So I'm keeping a close eye on this area to see if we do form the leg base group of candles. We'll look to take a breakout to the downside below this support area. That's going to be right below this basing area over here at 3929.25. We can see right now price is still rallying, so there's still buy tickets there that's pushing price up. But if we start to see that turn and price comes back down, looking for the leg base group of candles, and then we can start to splice into a breakout trade to the downside. Hey, Jason. Yes, if you look left of that zone, S&P 4080, you can see why it went down the first time. Wish I took that trade, happens overnight, seemed like a trend. 4080, let me go back up. 4080. You're right up here. So we can see price, when price started rallying up here, we almost got to our sell territory over here. We can see that this is actually where we had a small gap right in here where price, we had the support area right in here, and then we had this gap right there. Price rallied right up into that gap. And that was the origin of that move to the downside. Like you said, sometimes these happen in the overnight session. You can always set alerts on your phone or on your computer so you can monitor them. But sometimes it is difficult if it is happening, when you're sleeping and you're not necessarily watching it all the time. So just really keeping an eye on this one on the smaller time frame, since we are seeing the 3 touches coming into play, and then looking for that breakout to the downside. And then also just understanding we have that pocket of points. If we do start to break lower, not a whole lot in the way till we get to this 2-minute buy territory. That's going to be target at 38.23. And even so, that being a target because the trend is still to the downside. So that is S&P. Let's jump over to the Nasdaq. I'm looking for a similar picture across the board with the equity index futures. So Nasdaq is inside day. So overall, a little bit choppier market conditions. Going down, let's do a 15-minute just to get some more of that detail of what's going on. So have a 2-minute sell territory right at the origin of this move where we had some touches right in here. I would say this one's just going to be a little bit more aggressive and elevated risk due to the fact that it was formed in the overnight session. We can see we did have some of those touches coming into play right here. So 2-minute sell territory there. Also, I started marking out, you can see with the black dash line, looks like we're going to be making a breakout to the downside as well on Nasdaq. So again, 2-minute time frame to get more in that detail. We can see this area has been used up once, twice, 3, 4, 5, 6 times on Nasdaq. We're getting that rally up. So again, I'm looking for the leg base group of candles to then take the breakout to the downside. I would say ideally, once it clears this entire area, that might be a little bit higher probability of an entry point. So we can see this area is being used up. There still could be some orders over here. So you could either take the breakout where that dash line is or waiting till it gets down here to this pivot low point. And then again, looking for the leg base group of candles to form to then take the breakout to the downside and being able to manage our risk more closely. So we could say that we do have the leg base group of candles. It's like right over here. But again, if we're taking the breakout trade to the downside here at 11,865, and we're placing our stop at 11,972, that's a lot of risk. So don't want to take on that much risk, really just keeping an eye on what's going to happen closer to the breakout point so that we can manage our risk more closely, because that is going to be way too much risk. So that's going down to the 2-minute time frame. If you do like the smaller time frames, we have a 10-minute buy territory down here at 11,588. And I'll show you this one. So this one, again, going to be more of a target price since it is going to be counter trend. Let's see. There we go. So we can see we're on the equity index futures. We have a similar picture with the 3 touches, leg base group of candles below. And then we have our 10-minute buy territory right there. But just since it is going to be counter trend, looking at more of a target profit or target price after we get this breakout to the downside. If we do break out, then we do have another pocket of points to the downside. So this whole area, not a whole lot in the way until we get to our 10-minute buy territory. And then again, another sell territory up here, which is a lot further away. So if we start moving higher, pocket of points over here, but again, just taking a breakout trade to the upside, going to be counter trend and more elevated risk. This sell territory up here on the 20-minute time frame, that's going to be at, let's see, $12,478.25. You can see looking left, here's where we had the 3 touches over here. And then also right in here, if you go to a smaller time frame, we can see the 3 touches right in there as well before we had that breakout to the downside. Again, just want to preface, similar to the S&P, this one was formed on lower volume during the overnight session, so going to be a little bit more elevated risk with those setups. Okay, now jumping over to the Russell. So Russell is inside day as well. So inside day, it's Monday. Institutions going to be unwinding their hedges, going to be overall choppier market conditions. So just be prepared for that. We do have buy and sell territory. Going to go down to the, looks like 5-minute time frames. You can see on Russell that this area has been used up several times. So we can see price came down here once, twice, 3 times. So price coming lower and breaking below the support area. We could see a nice move to the downside to our opposing buy territory. Again, buy territory is going to be more target price. That's going to be at 1744.3. Hey Gallo, the supply zones are not zones that I'll be taking. Yeah, so keep in mind that those ones are going to be, again, from the overnight session, so maybe a little bit elevated risk. You can always do confirmation entries that if price does hold those areas, you could look for breakout trades or confirmation entries that way. So buy territory there, and then going up and to the left to find our sell territory. We have a 5-minute one right here. So this one I found interesting because it's right above where we're forming these high points right now. So it could be a trap area. We can see right above this resistance, we have a 5-minute sell territory that was formed on higher volume. That one is going to be at 1812.1. with our stop at 1824.6. And that one just looking left again, looking for the 3 touches. We can see this area right in here is where those buy orders were being filled before price broke lower. And then this one was formed on higher volume during the regular trading hours. So a couple areas to look for, and then again, just looking for those breakout moves since we are getting those 3 touches on the equity index futures. Oh, is oil dropping? Thank you, Daniel. Let me jump over to that one. So yeah, I wasn't seeing any buy territories in this area. Was looking for more of those breakout trade opportunities. Mentioned looking for the 3 touches in there. Anyone get in on oil? Let's see if we had it on a smaller time frame. Yeah, it looks like we had the 3 touches right in here. Price broke, came back up. Now we can look to see if there's another breakout trade opportunity. So just looking left. Looking for the 3 touches. It looks like it may be, so this wick throws it off a little bit, but I would say right in here. I'm going to go up to a slightly higher time frame, 15-minute. There we go. So right in here, breakout point right here, we can see price use this area once, twice, 3 times. And then, thank you, Daniel, you got the 5-minute sell territory on high volume. Let's mark that. So that if price does come back up to our sell territory, then instead of waiting for the breakout, we can look to take the pullback move. Excellent job, Daniel. Let's see, let's mark that one. We have our leg candle, base, leg out, and base. I would say we may also have one right in here too, where we could see the 3 touches here. It looks like we also have the touches down here as well. So waiting for that pullback is going to be at 111.02 with our stop at 111.59. Nice job, Daniel. Open range breakout. Great job. So now again, just waiting. So entry points is either waiting for that breakout or when price pulls back up into our sell territory, taking it as a short entry at 111.02. As Daniel mentioned, this was formed on higher volume right at the beginning of the session open. So excellent call on that. So we'll wait on that one, just see if it pulls back or if we start getting, you know, a bigger move down, looking to splice into that breakout entry. And then going over to the Dow, and we broke out to from the prior session's high, but could be a corrective move to the upside. Going down to the smaller time frames, you can see on the Dow, this area has also been used once, twice, 3 times. So potential breakout below this low down here would be at 31,305. If we get that breakout, target price is going to be 37.91. We have the leg base group of candles on the 5-minute time frame. And more of a target price, so either getting the breakout or price intercepting with a sell territory, but we can see is going to be a lot further away, all the way up here at the origin of this move to the downside. That's going to be all the way up at 32,486. You can see we have that support area right in there, but then this one, similar to the other equity indexes, was formed on lower volume. So if you don't like lower volume buy and sell territories, then you could pass on this one, but we do have that set up right there. And then again, looking for that breakout to the downside, where we also have a pocket of points right in here to our opposing target price. 8-minute on Nasdaq just formed. Excellent. Let's jump over to Nasdaq. 8-minute. Yeah, so we're getting close to that breakout point. You can see again, a lot of these orders have been filled up several times right in here. Let's see, 8-minute, just form leg, still needs the rest of it, you know, leg, base, leg. So once we get that leg candle to close and then the base candle, we'll isolate that group of candles and then take the breakout below this low at 11,864. Okay, and then jumping over to the indexes. So just looking for the correlations. All pretty much correlated, more sideways to the downside, I would say, on the equity indexes. So if the equity indexes do get a move to the downside, we want to see bonds moving higher. There we go. So bonds are moving lower along with the equity indexes. So typically we want to see bonds moving higher if the equity indexes are moving lower. So keep an eye on bonds. Going over to the internals. So we'll keep an eye on these once the market opens to see if we are at those extreme points or if we're in the middle of the no trade zone, understanding that that's where we're going to be more elevated risk. And then pre-market indicators. So we did gap down in the pre-market. So going to be a little bit more bearish sentiment with more down ticks and down volume in the pre-market. So again, just understanding all these different factors. It's still Monday though, and it's still inside day on some of the equity index futures. So just keep that in mind and manage your risk closely for today. All right, Jeff, I'm going to pass it over to you and see what you've got to share with us for today. Thank you, guys.
All right, good morning, everybody. All right, how's everybody doing? All right, looks like we're going to get that little breakout to the downside on the S&P. I didn't have that pretty much all the same levels, zones that Caitlin was pointing out. Gonna give us just a couple more seconds for some wiggle room and look to take the trade short 39.29. See my computer catches up.
Order fill.
Let's go back in here. I'm gonna drop this down to a 1 minute chart. Sorry, kind of hit the ground running. This is where the market was giving us that little way in. Just kind of, let's see, gonna have to give this a little more wiggle room than I wanted to. 1 minute. Quite give it that whole range, but I'm gonna have to give it a little bit of wiggle room. Get that stop loss. Okay, just on the S&P on a 3 minute chart here. Okay, of course, we're getting that little breakout to the downside. A little congestion over here. It's about 39.20 would be kind of that first little area to kind of look for. 39.23 as a target. The opposing zone, I think it's still going down. We need to look right over here, and it's right towards the end of the day. Let's drop that down to a 2 minute chart. Yeah, just watch these. I mean, the market could get reactive, so just be prepared to take a small profit. And over here, what the leg-based group of candles is just below all of this area here. Okay, I mean, this is the one that we could come up with about 38.92. So there may be a few people that are trying to get in right in that consolidation. We should just look for that 38.92, 38.872 area. Okay. All right, so we have that one working. Now pay pretty good attention because you know, we did break the prior session's high just by a little bit. I would even consider this as very close to an inside day, but you know, technically it is not, because some of the other indicators or indexes are. Okay, so that gap fill is one of those higher probability trade opportunities. Okay, just anticipating that gap fill. Okay, still a little bit of risk. It is Monday. Some of the other equity indexes are inside the prior day's trading range, and we do have a lot more bullish outlook on the market, or at least some short covering. We got 21 Dow stocks up, 1 down, so 20 times 2. Okay, so keep in mind that futures are over. We should be positive 40, so they're oversold at this point. Okay. We're still looking for basically that target range right around at 3900 there. 3920 would be that first little area to look for profits. Sorry, I can only get to one. My computer's running a little slow. Okay. And just watch the quarter hour here. Okay. Nasdaq also got that little breakout. Let's come back down to smaller time frames. Just trying to find that leg base group of candles. And I can't even find it on a 1 minute chart, so it's going to be a little elevated risk on these ones here. Yeah, we can see that looks like Tesla gap down. The other ones are coming back down just a slight bit to fill their gaps. See, Apple's good. Facebook. I guess we'll let that one play a little bit. See if we get that gap fill. Again, looking for on the Nasdaq about 11,803. It's just the leg base group of candles was slightly below that area. Okay. Below that consolidated area that we had right at the close of Friday. Now Dow's on the other side of the equation here. So on the Dow, so I'm keeping a close eye on the S&P. Up down to a 3-minute chart. 2. And what we're looking for is that leg base group of candles. So we've got leg in, base, leg out, and another base. Okay, so we have that range there right now, 31,000. 463 would be a stop loss. Entry would be above the breakout. Okay, so anytime we're going to look for that breakout or potential get that breakout, we want to find that leg base group of candles so we can manage that risk. Okay, now keep in mind, pretty much every one of these equity indexes is getting ready to go into this pocket of points. We had a low volume overnight drop. There are a couple little areas in between here. But I would anticipate if it does start breaking out to the upside, that it will be a great opportunity to kind of ride through that, just let your stop work. Back to the S&P, okay, we're looking so far, we got through that 39.20. We have the gap fill right down closer to work. Gap fill about 39.02. And we've got a few minutes before the quarter hour. Goldman Sachs looking strong. IBM is still a little flat. Still would like to see if that one's going to come fill the gap. Kind of in that dilemma. Right below, right in the overnight session, when the European markets started to open, looks like there's a little leg base group of candles. 3-minute chart. Right there about that 39.16 area. So it just came right close to it. Okay. We still have about 6 minutes before the quarter hour. Okay, so a pullback down in that 39.16 might be that profit place. Just below that 39.11, and then 39.02 would be the gap fill. Okay, so all places on the price chart where we should just anticipate either take a profit or, let's see, look at that Globex low. So yeah, the Globex low breaking that, we got the gap fill in 38.92 on the big one. Okay, does anybody ever participate in that one? You guys? Okay, good. All right, so we're coming up on that that session right there, as far as when the European session started. Okay, so this is this place we could see a bounce, but we're about 6 minutes ahead of the first quarter hour. Okay, so dropping this back down to a smaller time frame, kind of watching how price is responding to that area and determining whether I want to click the button and take a profit, see if it's going to bounce off the Globex low, or if we're going to look for that gap fill. So we have multiple choices on what we could anticipate here. Now, there were some leftover unfilled orders. We're getting a bounce, and 3 out of 4 times we'll do that, or 78% of the time. Okay. Now, we're a little too soon for the bounce to change trend. Okay, as far as watching and monitoring the quarter hour. Okay, so I'm keeping my fingers crossed at the moment and my finger close on the button to go ahead and take a profit okay? And I wanted to give it just that extra couple of seconds to see if it was going to break through that where the European markets came in. Now price went a little deeper in there and it's just kind of teasing us a little bit. And I'm going to look to go ahead and take a profit off of that. And then may have the opportunity, if we can get price pulled back down to that 38.92, first just a gap fill, 38.92, 38.72 range is where I would like to see price right around that quarter hour. Okay. As far as crude oil, okay, crude came back up. Actually had a little bit of a, I mean, the bigger time frame charts on crude were really messy for me. As far as what I'd like to see, it wasn't as easy to read. Okay, it's a 10-minute chart, but even a 60-minute chart, it's a little difficult, but more towards the bullish side that I'm seeing here. So instead of trying to find all the zones, I just didn't waste my time when I didn't see the picture was right. I went over and just set up the open range breakout. Now, a couple of things about the open range breakout trade that we should do at 9 a.m. Eastern. Mark your chart at 9 a.m. Okay, when session opens. The other key pieces of information are Globex high, Globex low for the crude oil. Okay, often these are places that price gravitates to. Okay, now just above the Globex high, kind of a trap area, we have 112.04, 112.42 zone there. And this area right in here that I'm looking at, it just felt like I was stretching it or trying to make something up there, okay? And when you're just trying to look for an area to make a trade, often it's just not there, okay? So if you're trying to say, yeah, those are 3 touches, take a little pressure off yourself, okay? And just say, does it really distinctly have the 3 touches, yes or no? And if it doesn't, then don't use it, okay? Just be very specific with your details and what you're looking for on a price chart. So we're looking for a buy territory where some buyers orders may be left over, 108.40, 107.62, and that was our crude oil, okay? So we always want to be aware of the Globex session, okay? And generally the open range breakout was the first target was either Globex low or breaking above Globex high. It would be the target to Globex high. But as supply and demand traders, and traders that look for the unfilled orders, we look for those zones that are on the outside of those ranges as well, okay? As far as gold, gold is, we're still in that trade. This was one we took last week, Tuesday. We were still in that trade from that entry down here. I have not moved my stop loss, okay? We did get into, let's just bring up a little larger time frame. We're in the middle of that pocket of points, okay? Or not pocket points, but that dead space, okay? So I'm still looking and shooting for 1882.20, and you can also see that dead space price doesn't go in a straight line, okay, but it does transition through that, and your initial target could be just on the other side of that dead space. Now, to get a more accurate reading of that dead space, you're gonna have to go back over and find the channel it was in. You got to go back to February, and then you could see where price based on top and then broke back into that dead space, okay? So as price is transitioning through that, we want to always be aware of those pocket of points and the dead space area. Now, the difference is, pocket of points that we're looking at is that strong drop, okay? A little different picture, okay? And when we're looking at dead space, it's really just the area between support and resistance, okay? So 2 distinct different patterns on that. Mr. P, it looks like, on crude oil, we just had the last trade day, okay? We just had the last trade day, so there's still a little bit of that shuffling around on the last trade day. Okay. Now we are approaching the last trade date on natural gas here soon. Okay, and natural gas has an area where we could look for a breakout to the upside above this 8.11 or 8.177. Okay, now be very careful with natural gas. It can take a good bite out of you when you're not looking. Okay. The reason I chose not to set this trade up right now on natural gas is that when I started breaking it down, 10-minute, 15-minute chart, I started seeing that my leg-based group of candles was significantly pretty far away. Okay. Now you can have a leg-based group of candles that are, and the zone being pretty far away. You may choose not to take the trade. And I chose not to take it because there was a lot of risk on this particular product. Okay. And you can certainly turn the time frame up or down to get a little better picture of that leg-based group of candles. Okay. We can see that it's even a little lower on a 15-minute chart, making that stop loss way down here and the breakout trade. So when your stop loss is too far away and you still want to take that breakout trade, be very cautious and realize that your risk is still down to this area. You got to give it that much wiggle room. If you're not willing to give it that much wiggle room, or if that much wiggle room is going to hurt, then leave it alone. We had the quarter hour market changed directions a little bit there. Okay. The Dow was the closest one to the breakout. Okay. But as we start turning down the picture or turning down the time frame, find that leg base. Remember, you're going to have to give this that risk. Okay. I'm going to go ahead and take that. I'm just going to size my position to 2 contracts here. Missed a little bit of it.
Order filled.
Stop loss 31,443. Okay. And what I'm looking for on this one is a very big pocket of points. 32,584 is that main target. But there could, Caitlin had a couple of smaller zones there that we could, let's just go back over here to the, let's just take a look at that pocket of points and see if there's anything that we need to kind of highlight in that area on this small time frame. And see here we have resistance, so we'd be looking for demand right up on top. Might have a little speed bump right there about 32,045. But I didn't find anything else really that warranted where I could find the 3 touches. Okay. So target 1. We'd be looking at 32,045, target 2, 32,548. Okay. Now this is also a price pattern that is really common in the industry. Okay. How many can tell me what pattern it is? Anybody? Teacup. Yeah, you got your little cup and handle. Okay. Now, cup and handle is a nice little price pattern to participate in. It's also associated with a continuation pattern. Okay. Now, the thing with continuation patterns is that it is usually already within the trend. Okay. And while it's with the trend, okay, it continuation pattern, we're anticipating that the move into this is the move out. Okay. And as far as that move into it, we can see that the initial move into that continuation pattern was up. Okay, so now we're expecting price to continue to move up. First target 32,045. That's almost a little less than 500 points, and then which let's get some of these shorts to cover. Might be a significant trade. Okay, so not only just understanding supply and demand, breakouts, managing risk, leg base, is to understand what other participants are looking at. Okay, and continuation patterns, especially this cup and handle, is very popular with investor business daily type folks that follow those. All right, so let's see if we have an opportunity. Russell was probably the other one that was ready for that breakout. It looks like we got a little ways to go on that. Gold, Dow. Looks like the Nasdaq and the S&P are not quite to that area yet. Okay. I'm going to break the S&P down. Let's go down to 3-minute chart. As we're approaching that potential breakout point here, we've got several touches in that range. Let's just call this last one a touch of that range. Okay. And what we need is a leg base group of candles. Still leaves our stop pretty far away. Okay. So a little bit more time on the S&P to do some of that that setup to get that leg base. If you're going to look, take a breakout on the S&P, give yourself enough wiggle room, exactly what the chart requires. Okay. And if it's too much, then step aside. Okay. Just don't take it. All right. Now, the other picture over here on the daily chart. Okay, we can see that we just barely broke the inside day. Our resistance levels. And one way to kind of gauge this is just take this last leg down on a daily chart like such. Okay. And one thing I found very useful is, and I call these trades out all the time, is using the 88.6% retrenchment. So just kind of grab your lines, and then with each daily chart, just kind of lower them and get the recent high, and just keep marking those. Okay. This price tends to react to these areas on a daily chart. So I monitor this quite often throughout the trading day to see if price is meeting those areas. And very often it does meet those areas. Sometimes it'll go just above or below that, and then it'll we'll get that entry. And all you're doing is marking the 88.6% retracement. And this just says, get ready. Okay, so looking for a 4,063 on the S&P. You start looking, well, I don't know if it can get up that far, but look at the big moves we had to the downside. Okay, the only one thing that's going to take us out is if we start getting some move back to the upside and see if things are going to change up a little bit. Yes, everything is bad. It doesn't look good out there, and as far as the economics and such, but just keep vigilant on that. Okay. Now I'm going to take you out also to the little bit larger time frame on the equity indexes. And big picture. Okay. So we have nice little stair step down in a downtrend. Okay. Now we're starting to see how potentially a brand new fresh accumulation of orders could be built. Okay. But we still have to take out some smaller time frame resistance areas in order to base alongside here. And we just got one maybe one touch, maybe one and then two touches right here. So building a brand new fresh accumulation of orders right here, we would get that move that would take us to the upside. Okay, still not out of the wood, but these long tails that are left behind often are in front of bigger moves to the upside. Okay, so I'm looking for a little more bullish sentiment on the S&P and the Dow. Okay, and probably grab this one. And we could see this same little resistance area. Nice little stair step. We got to take out some of these areas before we start changing our hat more to a bias to the upside. Just be aware that we've had a nice move down, and especially on the S&P, we broke 20%. Okay. Now, hard, fast rules with like Fidelity, like Vanguard, Templeton, big mutual funds, okay, is they often go to 80% cash once it breaks 20% off the high. Okay. Those aren't my rules. That's just what they do, and it's in their bylaws. Okay. Now, they don't close out their clients' positions. They just use less of your money. Okay. So when we saw this last break of 20% down, okay, was when COVID was, when we were shutting down the country. Okay. And as we come back and look at that time frame, when that happened, let's just take a quick little measurement from the high to the low, because we're getting a bounce up today, but bear market rallies are also very significant. They're violent. Okay. And they get everybody all excited and come right back in and take their money. Okay. Let's get that. All right. So last time we went down 20%. Okay. So the market extended down. Let's just ballpark it. Okay. And we got a nice significant bounce for about 3 days. Okay. And then it failed. See, right here is where we got a huge drop because the banks and the big players decided to go to 80% cash, which caused kind of the final break until price came back up. And then we're just right at the beginning of all this downturn. There could be significantly more when we start looking at larger timeframes on these equity indexes. Okay, I mean, they could have a significant correction. Okay, right now it is also taken from low to high. You're going to get a few Fibonacci guys out there saying, "Oh, that's a 1/3, 1/2 retracement." They're looking for 38.50 and 618, which are very common. Okay, and right now we're at the 38% retracement. Okay, which is still very bullish. Okay, but it had a nice significant pullback. If we should continue to go lower, then we need to look for the leg base group of candles and all the criteria around it, and take particularly close attention to 3,500, 3134, and so on. Okay, so very important. And I know Caitlin does a great job of showing you the bigger picture and trends, and but sometimes you just have to put a little math behind it and understand that the personalities, those fundamental pieces of information that are outside the price chart are very, very important. Okay, and if Fidelity and Vanguard, those type of companies are going to 80% cash, they don't want to sell at the bottom. Okay, so what they're going to do is we'll see price move up a little bit, and then we'll still anticipate taking a trade short. Now, some rules around that is once price takes out 2 resistance areas, it's pretty safe to determine that you can look for a pullback and then try to splice in to the move back up. Okay, but just breaking one, it's still kind of iffy at that point. Okay. All right, so crude oil on the way back down. We don't have another breakout trade per se. Okay, but that open range breakout is still holding. and was looking for 108.40 on that. Okay, 5 minutes right there. Nat gas did get the breakout, but it was, as I stated before, it was a little more risk. So I didn't choose to participate in that one. It's a lot more risk, actually. Let's see, we have a buy territory, 1842, 1837-ish goal as it's going through the dead space, okay? Now, dead space is pretty much over, right about that 1873. But there's really nothing in the way right there. So we'll look for 1882, 1893 as where we might find those sellers that could push price back down. Okay. Russell breaking down. Interesting. Okay. And let's just double check this because we're getting right at the 10 o'clock hour. This is the area that we are looking for right at the close of the day. Okay. And we got the gap fill. There it is. Now notice when you use the leg base group of candles, sometimes those zones can just be right on the other side, okay, of it. So I'm going to try one. Let me get it right. Yeah, it's right down there. So a lot of folks want the zones to be up a little higher. I get it. But you want to look for all the evidence there. So you have leg base group of candles here.
Order fill.
And right here. And let's come back over here and see where we're at. Looks like we took out top one. We're going to look for where they overlap. Right about 10:03. Let's take off that top one. Okay, so we got another 45 seconds or so. See if price can get into that zone. Now, what I just mentioned here is that right about that 3 minutes after the top of the hour is when we've seen many of those bounces, okay? I'm going to look to participate in this. Stop loss be 1761. And I'll just take 2 of the micros coming into that area. We did get stopped out on the Dow. And that's where I want to be real clear about, when price breaks out and starts coming back into that area. Another thing about the cup and handle is that you have to be worried about that handle part, okay? Because that's a little dead space in there. This doesn't continue to break out to the upside all the time. Okay, yeah, we're back. Russell.
Order fill.
And stop loss be 1761. And 30 cents. Of $73 risk on 2 micros. Okay. And potential, if this area is the one that's going to work, then we've got a large upside up to 1828. Probably a couple little speed bumps along the way. Let's just drill down into that. Yeah, let's watch this area right in this range. Okay. Let's see if we get a move. Fingers crossed, hold your breath. Turn. We want green, not red. All right, still doing a little bit of a shuffle down here. Let's check the S&P. S&P is not quite down to that area, okay? And the area on the S&P would be that 3892, 3872, which is what we just saw on the Russell. It's just slightly lower than where that base was. On the Nasdaq, Nasdaq did come into it, 11,803, 11,724. Let's drop down a small time frame. As we come, you can see that a lot of folks were looking for this area right here, okay? And then it just went slightly beyond, because that's where the importance of the leg base group of candles comes into play, okay? Is we found it a little bit lower. Now the range was wider and many people would like to make a smaller zone, okay? But sometimes the evidence on the chart is just what it is, okay? Gotta let it work. All right, so broke out there. And potentially getting another move up. We do have some overnight resistance. Okay, which could be where price may want to retrench back up to. Okay. Noticing these markets are not moving a whole heck of a lot at the moment. Trends right in the neutral area. US dollar is one to pay particularly close attention to. Oops. Okay. In as much as we just took out this support area, we got a nice little bounce off of it. Okay, there were some unfilled orders there. And one of the things we looked to the left, it was not a lot of the three touches over here. Okay, now just in general, when you don't have the three touches on the left hand, the left hand side of the chart, very often you can get a bounce off the leg base group of candles, but then you can also see price failed this area. Okay, so price broke that support area here. No support, at least on 60-minute chart here, but we do have a couple of areas where we would look for some sellers should price come back up into that range. Okay, now if the US dollar is going down, then we should expect the euro be going up, and we have seen some significant moves on the euro. We're not out of the woods yet. Okay, the FX markets are starting to turn, which is a good signal of good things to come. Okay, or at least a good trading environment. So the euro has a long way to recover, and it has several areas where you have the dead space in that. You could probably even go with we've got that resistance. So you're going to find that throughout today, there's going to be some small short-term trade opportunities, but for the most part, it's going to take a little longer to get these turns. Okay, Amazon just took a spill down here, and we're getting a little mixed market on the Nasdaq stocks. Okay, so the NQ is going to be a little more elevated risk, taking that trade long at 11,803. Unless we get more of the stocks to come along with it. Okay, we'll watch closer to the quarter hour. Okay. YM did get it pulled back. Okay. So in order to get back into this trade, we're still going to need a leg base group of candles. We need some information. Okay. Now, how many times does price usually go back and forth when we're making the handle for a cup and handle? How many times back and forth before it breaks out? Yeah, right around that 7th time. Okay, so we got 1, 2, 3, 4, 5, and now we're at 6. Okay, with the breakout potential up above. Okay, so I know this is not everything that we cover, but there's just some experience that I'm sharing with you right now. Okay, so at point 6, if we can develop a leg base group of candles right in here. Okay, 2 minutes, let's put 1. Okay, so on a 1 minute chart, we do have our first leg base group of candles, and it is 0.6. Okay, of the movement. We expect to break out on 0.7. Okay. So at this point, if you do take the breakout, then the lower line 31,443 becomes the stop. You got the trade set up?
Yeah, just want to share something real quick. I'm kind of spinning my wheels a little bit trying to find some trade setups, but I did just see oil, so I want to make sure you guys are aware of this, but had to go all the way down to the 1 minute time frame. You can see here we're starting to get the 3 touches once you go down to the 1 minute. So price has been here once, twice, 3 times. Right now, I'm just struggling to find the leg base group of candles since I'm all the way down on the 1 minute. We may still form it, but it's just a setup that I'm seeing since we didn't have any, from what Jeff and I went through, not a lot of quality buy territories. So when we see that, we see the 3 touches start to form. I'm going to be keeping an eye on right in this area to see if we can form the leg base. Right now, I do see we have a little bit further up. We have leg, base, leg, base. I'm just really keeping an eye on right here, right below this breakout point, which is going to be below this low at 109.84. If we start to push lower and we form the leg base, then we can look to take the breakout trade to the downside. So going up to the 15 minute, and there's not a whole lot of quality buy territories in the way. There's more of the 3 touches that we're seeing. So looking for that if we could see a big move to the downside, looking for those 3 touches and those breakout points. Jason, how many S&P points do you need to profit to play tennis on rooftop? Good question. Probably a lot, Jason. Yeah, just keep an eye on the 1 minute time frame to look for the leg base group of candles. So we're still getting that pop up now on oil. So waiting for the leg base to form. And I heard you got filled on something, Jeff, right? I'll pass it over to you.
All right. All right, yeah, I did get the breakout again on the Dow. Okay, at 31,578. Or it got filled at 79. My stop loss at 31,453. And yeah, price comes down here. I do have enough profit margin to the downside if it breaks that support area. Again, we're on 1 minute chart watching things go on. That I can recover a potential drawdown. Okay. And let's come back and look at our Russell trade. Okay, Russell is still working out very nice. Okay, notice the zone was just a little bit lower on that. Okay, so far it's leaving a nice little tail and starting to move up. Okay, let's check out the S&P. S&P didn't quite retrench all the way back down to 38.92, 3/4, 38.72. Got really close to that gap fill. But again, the S&P, we're not expecting that too much since it did break the overnight high. Okay, so it was not an inside day on the S&P 500. Okay, but the other ones were taking their time because they did have an inside day. Okay. We got the NQ. NQ is making a slow turn off of here. Okay, but we still have no help from Amazon, and Apple and Microsoft still look a little bit more on the weaker side at the moment until we start moving higher. Okay, so coming back out to the 15-minute chart here. Okay, Nasdaq did dip into that 11,803, 11,724. Okay. still the higher time frame trend is to the downside, but we have a significant picture on the price chart. It is often associated with a V-shaped reversal. Okay. So a lot of these V-shaped reversals, they do have a lot of the mathematic characteristics that go along with them. They're a very steep, strong drop and a fast recovery with more of a shallow retrenchment. Okay. This one went a little bit more than normal. Okay. And this is also what some traders would call is like an inverse head and shoulders pattern. So we always need to be understanding what other people are looking at. Okay. And understanding, that the potential of those people implying, right around this area is going to look for a breakout, a break of the neckline. These patterns have some other influences where you take the distance from the head to the neckline, and then you can kind of gauge when, you've got that supply up there, so you can kind of gauge when that move should take place. Okay. So we can see that these are also associated with measured moves. Okay. And if the measured move lines up with a supply or a demand zone, okay, we look to use that information, maybe get out a little bit earlier where the measured move guys are waiting for a little bit longer to go up. Okay. So a lot of technical patterns that are going to start attracting novice traders into the market. Okay. So we have to anticipate other people's behavior. Okay. Other people's actions that they're going to take. We're right about quarter hour there. Okay. Dow's struggling here. I've got a little bit of a profit. I don't have a place to adjust my stop loss yet. Actually, we do, because we got leg base, leg base. So it's not much, but I could adjust my stop loss to 31,452 based on just using the technicals there. Okay, now target for the Dow is about 32,045 as the market starts to respond by moving up a little bit. Okay, Russell. Nice long tail right into our buy territory. Beautiful entry. Okay, remember we had to go all the way down to what, a 2 or 3 minute chart to find the leg base group of candles. And just to reiterate on that a little bit, let's start with the 5. Okay. He said you'll start to see that when people are looking for the gap fill, which was roughly right about that area, we got the gap fill. And there was potentially a lot of people just using this small range right here, and they got stopped out, only to see the leg base on the other side of it where we had our zone marked. Okay. So that leg base group of candles, if you're not really familiar with it and have not gone back and verified that information many times, okay, you won't feel as comfortable with it. But once you do, you'll start feeling a lot more comfortable in your decision, and it gives you information to help you manage that risk. Okay. Now, the higher time frame is still to the downside. That's why it's taken so long to get some momentum going. Okay. A lot of people unwilling to buy. So what would trigger people willing to buy? Well, if they were short the market, price breaking above a resistance area is going to cause the shorts to cover. Yeah. What elements are you considering to stay long? Okay. Well, part of it was each one of the equity indexes did have that V-shaped reversal. Okay. In order to go short, where does price have to go right now? If I'm going to go find the group of sellers, then price would have to go up, correct? Okay. But it's that understanding of if price is going to come to my supply area, okay, it must go up. If it's going to come down to the buy territory, then it must go down. So where are we willing to take a trade? At current moment, Russell has no clue of where to take a breakout. There is no breakout. Okay. So it has to go up to that supply. Now, have you ever been to an intersection where, you know, the traffic is kind of mediocre and you take a little risk to cross the street when the crosswalk clearly says don't walk? Okay. That's the same feeling you're taking as a counter trend. Now, some people will just remain on the sidewalk until the light says walk. And that's perfect. That's fine. Okay. But those are a little more less aggressive. They maybe not in a hurry. Okay. But as you start to use that analogy, okay, you realize that crossing the street when the crosswalk says don't walk is taking elevated risk. And these are those trades like right now, crosswalk says, you know, go short, okay, but I need to get to the other side of the street. Now, when I take that additional risk, I'm willing to manage that risk by having a protective stop loss. And many times I want to see that if I get stopped out, is there potential for me to get the money back? Okay, is there a good pocket of points? Is there some evidence around there that I can use? Okay. All right, so yeah, Russell is still inside the prior day's trading range. Now, we've mentioned this several times before, but how often do breakout trades really work well on an inside day? How about it, everybody? See, is that taking a little extra risk as well? I mean, we're inside day. It's kind of choppy, designed to take our money. So we know we're taking extra risk. The crosswalk says don't walk. Okay. And we have to wait for pretty much supply and demand zones in order for us to participate in a trade. Okay. So in this market condition, with the elements that are on the price chart, okay, let's step out, look at our dashboard. Our dashboard, S&P looks closer, Dow is moving beyond it, and the Nasdaq still has a ways to go, okay? But all these chart patterns have a very similar picture, okay, as a V top, or sorry, a V bottom, okay? And each one of them has that pocket of points right over here till we get up to where the sellers, okay? So in overall, we're looking for the opportunity, you know, better opportunity as far as number of points, okay, would be to the upside, okay? Now to the downside, it's not quite ready. How do we know it's not quite ready? Well, we went back and looked at the last time. The last time the S&P did this was right around the COVID time when it went down 20%. It bounced up for 3 days and then continued to sell off as the institutional participators and institutional players started stepping out of those positions as per their trade plan, okay? Now to monitor a little closer to this, look at the tick and look at the other internals to see if the other internals are going to support markets moving up. And so we have the advancing issues over declining issues. They're on the right side of the no trade zone. We have the tick. It's really still hovering right around the middle. We haven't got up to the place to take profit or sell yet. And the trend is more in that accumulation phase, okay? So putting all these things together, yes, we're getting a little bounce, okay? We took a buy territory trade on an inside day. I didn't take a breakout trade, okay? So I added just a little bit more in my favor when having the entry was not a breakout trade. It was more just like a, you know, it was off of supply and demand zones, okay? Now that would equate to, you know, coming back and looking at some of our other trades that we took as far as a short-term trade on the S&P this morning. We took that, was it short? Yeah, we took a short-term one, little breakout, okay? Now, we took a breakout on the S&P, not on the Nasdaq, not on the other ones. Because the other three were inside day and S&P was outside just by a little bit, okay? But still, we just took a smaller profit, mainly because of market conditions, okay? So having said all of that, it's going to be a little bumpy going through this, okay? We must manage risk. Anything can come out that might be bullish, might be bearish. We also need to consider that we're getting into that pocket of points area, okay? So it's a lot of information that we keep stacking together in order to assess and manage our risk, okay? The leg-based group of candles helps us determine those lines in the sand, where we will put an entry and where we will manage that risk, okay? All right. So I'm going to pass the mic back over to Ms. Caitlin and let her do a wrap up for us today.
Great job, Jeff, and great job, everyone. Did anyone grab that oil breakout trade? We can see it worked for a little bit. For me, though, I didn't get into it, so I was looking at the 1 minute time frame. As I mentioned, for me, I'm looking for the leg-based group of candles. I looked at the 1 minute, I looked at the 2 minute, the 3 minute. I couldn't find it except for the 1 minute that was all the way up here. So for me, taking a breakout trade here and then having to place my stops so far away isn't something that I like to do, just because I'm taking a lot of extra risk on a trade when I should be taking that and focusing on trades where we're taking less risk. So just understanding that when you're taking the breakout trade, price can always come back up to that leg-based group of candles. Couldn't find it in here. So again, understanding that the leg-based was all the way up here, we were going to be taking on a lot of elevated risk with that crude oil trade setup. Patrick took a scalp and made a little bit. Nice job. Yeah, for me, maybe you could have gone to, like, some traders like to go to the second charts, and you likely could have found it in here. But again, for me, just dropping down to the 1 minute and not seeing it, that, whatever your trade plan says, if you're using the leg-based to manage your risk, you really want to keep that as close to the breakout as possible to be able to have less risk on those trade setups. Just seeing it right now, looks like we have 1, 2 touches, maybe a third one. Keep an eye on this area too. It seems a little too soon to jump in. That's a quick 1, 2, 3 touches. But if we start to form that again, just again, repeating that process, finding the leg-based. There we go, another small breakout on oil. But again, just understanding the market conditions today, and what Jeff did a great job mentioning is just, it's acting like an inside day. So breakout trades are going to be elevated risk. And just understanding that to manage your risk more closely, we want to stack as many odds in our favor as possible. The 15-second, Greg, you go to the second charts. Anyone else go on second charts? I'm curious. I know I don't think Jeff and I do too much, but does anyone else look at the seconds to find their leg-based? Alice says nope. Yeah, for me, that's a little too fast. Don't have that info? No? Okay. Yeah, I was just curious. So the recap, going to be easy today. So our buy and sell territories didn't hit. So I'm just taking it. I just copy and pasted what was off the prep screen. So if you guys want to just make sure you take a screenshot of the prep screen. Again, just to understand that these buy and sell territories still haven't hit yet. So they may hit after our session. So sell territories up here, buy territories, we're seeing more of those moves to the downside. If price does intercept with our buy territories, just understanding those are going to be more counter trend. So looking for our sell territories or those breakout trades with the 3 touches. And oil coming back up, but really just keep an eye on the equity indexes. I'll recap them on the smaller time frames. Oh, it's funny, Nick, my trade station tries to self-destruct below 2 minutes. Like, all right, too much info, too much going on, not going to handle it. Just probably good just to stay to the higher time frames. So S&P 5 minute. Again, we had that breakout, the 3 touches, price broke out to the downside, Now price coming back up, it looks like we also have the 3 touches now on the top side. Right up in here. We can see price tested this area once, twice, 3, 4. Now this is the 5th time. But then again, just keep in mind, if you are taking a counter trend breakout trade, find the leg base group of candles to manage your risk and understanding that you are going to be going against the trend, which is still moving more to the downside. So S&P can set up right there, 3 touches on the top, but for me, I'm not going to be taking that one just because it is going to be counter trend. Also, not a whole lot of, there's not really a buy territory down here. This is more of a pivot point. You can see price just dropped into the gap area over here, rallied back up. So our nearest buy territory is going to be down here after this pocket of points at 38.23. Russell's on the move. Here, I'll jump to Russell next, and then back to Nasdaq. So Russell, let's go to the 5-minute. Yeah, going back up, let's see. So here's where we had on Russell, we did have that support area, price using it once, twice, 3 times. We broke, tested this sell territory just above. It's going to be right in there, likely on a smaller time frame. We can see price broke, came back up. Now price coming back up. So not a whole lot till we get down here where we have our buy territory. That's where we have an area below that resistance. Here's where we have the 3 touches. Let's see, there we go. So right in here, we have that resistance. We have our buy territory just below. Again, this is going to be more of a target price just due to the fact that we're still more of in a downtrend. Looking for price to rally, we have our sell territory tested once, so some of those orders have been taken out. We may see price go above this area if we do find the leg base just above, or ideally if we see the 3 touches start to form on the bottom side again, we can look to take another breakout to the downside. So right now it looks like, just looking across, we just have, oops. There we go. Looks like we have 2 touches here. We can see where price consolidated. Price came back in once, came back in twice. So potentially price coming back down. We could look to take a breakout below this support area on the Russell. And then jumping back to the Nasdaq, smaller time frame. I happen to go to the really smaller time frames today. So Nasdaq, we had that breakout, and then price came back, went just above our sell territory that was over here, and then came back to the downside. So if you notice, just looking left, seeing it now, we can also see how this is where we had a support area here. It looks like price just went deeper into this sell territory right over here. So sometimes if price breaks your sell territory and just goes a little bit further, look to the left and you may see some additional information over there. We can see here price tested this area once, twice, 3 times. We broke. So price really just came back up into this sell territory over here. So price coming back up for a 3rd time, looking to take the breakout to the upside, but that's going to be counter trend. And then buy territory still down here. We have a pocket of points below this low. So we get down here at 11,588.25. And then lastly, the Dow. Seems like people are piling up on Google and Amazon. Yeah, I mean, with prices so low, people are going to start buying, but just keep in mind with the trend still being to the downside, if you are starting to buy, waiting for a little bit more confirmation that the trend has changed is going to be a little bit higher probability. And then Dow going to go down to the 5-minute time frame. See, again, we had breakout trade to the upside. Price took out this area. Price came back down. Looks like just took out this area here and then continued to go back up. So pretty choppy today on the Dow. Below this support area, you can see prices used up this area several times. So breaking below here, where we have, again, we have this gap area and also potential area where price could stop. But then below that, we have a pocket of points down to our 5-minute buy territory. That's going to be at 37.91. And then for our nearest sell territory, let's see, going up and left. And a big pocket of points also over here on the left side for price to rally to. Just always maintain a little bit extra caution with these breakout trades, even though we do have a pocket of points over here, just understanding that it is still going to be counter trend and managing your risk a little bit more closely on those trade setups. Opposing sell territory is going to be all the way at the origin of that move to the downside, which is going to be at 32,482. All righty, Jeff, what'd you get filled on? I heard it go off.
Let's kind of do a second recap here.
Okay.
I just did, I got filled on the S&P. You know, it's the only one I could take a breakout on, but my stop loss is a little far away. That's why I just took a couple micros. Okay. What's really driving me is this area here, this pocket of points, the overnight low volume. Okay. And I did have to drop the time frame down to very small and to find the leg base group of candles. Okay. Where I could manage the risk. 2 minutes. Yeah, see, there we have the leg in, the base, leg out, and base. So it's a wide range, and based on what the market is doing and anticipating it to go up for a day and a half, 2 days here, I give it that little extra wiggle room on a couple of micros there. The breakout trade is still available, but it's only on the S&P. Okay. The other ones don't quite have it just yet. Okay. So we have that one. So yeah, that'll take a little wiggle room for me to sit through. And let me get this cleaned up so you can get a nice picture of it. All right, so just going from the top, we had S&P, we just entered into. Now we're down a little bit at the moment, have our stop loss in place. Nasdaq, I wanted to jump in on something, but it's just still looks like it's going to take a little while to build that right shoulder. Okay, we do need some participant, little help from the Apple, Microsoft, Facebook, but also they are looking on a small time frame at potential breakout areas. So once it starts to break, we'll get a little bit of a momentum. So nothing done on the Nasdaq. On the Dow, we took the breakout. Okay. Prior sessions high, we could see that the Dow did break the prior sessions high in the overnight session. So it was not an inside day. So we could take the breakout trade on that one as well. Okay. And again, just to mention what's really driving me is, you know, this whole area, good profit margin potential coming in. Okay. And how many of you guys are in on the Dow trade? Anybody? Okay. Now I want you to check your emotions, and I might go over just a little bit here. But check your emotions. Do you feel overly like hold your breath type on the trade, or you just kind of like, okay, well, it's going to go. Okay. If you're really kind of flighty about it, just kind of reflect on, you know, why do you feel that way? And kind of, it might be because you got stopped out at some other trades, or it wasn't a good week last week. Okay. But if you just took this trade today, do you feel really threatened about trying to take the profits really quick? Okay. That is something to evaluate. Everybody has to evaluate themselves. Okay. Russell, beautiful, nice tail, dipped right into that 1767, 1761 zone that we had there. Okay. Again, the Russell is still inside the prior day's trading range. No breakout trades until it's outside the prior day's trading range. But we got a nice significant little bounce off of that. So we'll be reviewing those. Gold still just kind of hanging out. We got a buy territory 1842, 1837. I'm still looking for that the other side of the dead space, about 1873, and going up to 1882, where I expect there to be some sellers still sitting. Crude oil, we talked about the open range breakout. It was a little fast for what we do right at the open. And we had to wait for that first 5-minute candle to form. And usually we're looking at something else, but it still shows that, you know, price is coming down to the buy territory or coming back up to the sell territory off of that open range breakout trade. And we can look for those, maybe a potential opportunity of 108.40, 107.62, see if there's any buyers left as they push price back up, okay? And the natural gas, this one, this stop loss would have had to be too far away. I deemed it was too much risk for what I would like to do, but nonetheless, take the time and paper trade it, okay? Now, as prices also coming up above, there's potentially another opportunity, and you just need to keep gathering the information. And you may, with your boxes, you may want to, when you have a 2-touch, make it a different color versus 3-touch, you can use green and red. Just kind of get yourself organized to what you like to see on your charts, okay? So nice little breakout there. We didn't really get into the currencies, which are ones that we do need to watch. Australian dollar, okay, it just broke out. If it starts coming back into that range of the breakout, it's significant, okay? So we're not out of the woods until it starts really climbing. But once it breaks out of resistance, start looking for that topping 3 touches, because if it starts breaking back into that range, it could easily sweep down, okay? And make sure if there's a dead space below it, okay? And we have a little resistance on British pound. I'm not going to try to go short. I'm going to try to stay long on these, but I see where the dollar is retrenching back to. One major one is also as an odds enhancer would be watching the euro. And again, see that dead space right over here? And you could even extend that across, okay? So if we make a topping pattern and you have the 3 touches or support, breaking back into that area, price could move to the other side very quickly, okay? If you haven't really studied the dead space or the pocket of points, we still have that video out there that we produced a couple of weeks ago that has that. So that's it in that's kind of it in a nutshell. You guys trade careful today, okay? You're crossing the street when the crosswalk says don't walk. So just understand your risk, okay? Anything else you want to wrap up with, Kate?
Yeah, one last thing before we go, just make sure if you have sent in your emails to us for the coaching event, awesome, we do have them, so thank you for sending them in. And if you haven't sent in your emails to us for trade setups you want us to review, feel free to send those anytime this week before Thursday at 4 p.m. Eastern time. We're going to be going over all your chart setups as well as everything that happened during this week, doing a full recap, and just making sure that all your questions are addressed, reviewing what trade setups worked, which ones didn't, and making these sessions really interactive and specifically for you guys. So looking forward to that. Again, just want to make sure that if you have signed up, you're already sending in your charts to us. And then to sign up, you can go to our website again under the upcoming events tab. Then you're just going to scroll down a little bit. And it's going to be the second one on that page. So we look forward to seeing you all there, and we'll see you guys all tomorrow as well for another great trading session. Stay safe, as Jeff mentioned, and have a great rest of the trading day. We'll see you all tomorrow, everyone.
Good day. Thank you. Bye-bye.